Ever feel like tax season is this looming, complicated beast? You're not alone. As a small business owner, keeping track of every penny in and out can feel overwhelming, especially when it comes to those all-important tax deductions. But what if I told you there's a powerful tool in your arsenal that can help simplify this process? We're diving into QuickBooks today, and specifically, how this popular accounting software tackles the often confusing world of tax deductions. Stick around, because understanding how QuickBooks handles these write-offs can save you serious time, stress, and ultimately money. Now, before we jump into the nitty-gritty of QuickBooks, let's quickly level set on what tax deductions actually are. Think of them as expenses that can be subtracted from your taxable income, effectively lowering the amount of tax you owe. These can range from business travel and home office expenses to software subscriptions and professional development. The key is that these expenses must be both ordinary and necessary for your trade or business. Why is this important? Because properly identifying and tracking these deductions is crucial for minimizing your tax burden and maximizing your profitability. Missing out on eligible deductions means paying more in taxes than you legally have to, and nobody wants that. So, how does QuickBooks step in to help? Well, it acts as a central hub for all your financial transactions. By diligently recording your income and expenses within QuickBooks, you're essentially building a detailed audit trail that makes identifying potential tax deductions much easier. One of the fundamental ways QuickBooks assists with tax deductions is through its chart of accounts. This is essentially a categorized list of all your business's financial accounts. When you set up your QuickBooks account, you'll typically have a default chart of accounts, but you can and should customize it to accurately reflect the specific nature of your business. Think of categories like advertising and marketing, rent, utilities, supplies, and professional fees. When you record an expense, you assign it to the relevant account. This categorization is the first step in organizing your financial data for tax purposes. As you consistently categorize your expenses throughout the year, QuickBooks is quietly building a comprehensive record. When it comes time to prepare for taxes, whether you're working with a tax professional or handling it yourself, you can generate various reports within QuickBooks that summarize these expenses by category. For instance, the profit and loss, or income statement, report provides a clear overview of your revenues and expenses over a specific period. By looking at the expense section of this report, you can readily see the total amount spent in each category, making it easier to identify potential tax deductions. QuickBooks also allows you to attach documentation, like receipts and invoices, directly to your transactions. This is a game changer for audit trails. Imagine being able to instantly pull up the supporting document for any expense, should the need arise. This feature not only helps you stay organized, but also provides crucial evidence for your deductions. Beyond basic expense tracking, QuickBooks offers features that are specifically helpful for certain types of deductions. Let's take a look at a few examples. Vehicle expenses. If you use your personal vehicle for business purposes, you might be able to deduct these expenses. QuickBooks allows you to track mileage or actual vehicle expenses, like gas, repairs, and insurance. You can set up vehicles within QuickBooks and log your business miles, or record the actual expenses incurred. QuickBooks can then help you calculate the deductible amount based on the method you choose. Home office deduction. For those who work from a dedicated space in their home, the home office deduction can be significant. While QuickBooks doesn't automatically calculate this, its robust expense tracking allows you to easily identify and total the relevant expenses, such as mortgage interest, property taxes, utilities, and insurance, for the portion of your home used exclusively and regularly for business. You'll still need to perform the calculation based on IRS guidelines, but QuickBooks provides the necessary financial data. Self-employment taxes. As a self-employed individual, you're responsible for both the employer and employee portions of Social Security and Medicare taxes. The good news is that you too can deduct 1/2 of your self-employment taxes. QuickBooks helps you track your income and calculate these taxes, making it easier to determine the deductible amount. Depreciation. For larger assets like equipment or vehicles used in your business, you can deduct a portion of their cost over time through depreciation. QuickBooks allows you to record the purchase of these assets and track their depreciation according to various methods. This ensures that you're claiming the appropriate deduction each year. It's important to note that while QuickBooks is a powerful tool, it's not a substitute for professional tax advice. Tax laws can be complex and are subject to change. QuickBooks helps you organize and track your financial data, making the process of identifying potential deductions much more efficient. However, it's crucial to understand the specific requirements and limitations for each type of deduction and to consult with a qualified tax professional to ensure you're claiming everything correctly and legally. Think of QuickBooks as your diligent assistant, meticulously recording and organizing your financial information. It provides the raw data and the structure you need to navigate the world of tax deductions more effectively. By consistently and accurately using its features, you'll be well equipped to identify potential write-offs, support your claims, and ultimately reduce your tax liability. With that said, thanks for watching, and until next time.